Welcome everyone. We're going to take a look at crude oil. And at first, of course, I'm looking at the September crude oil futures. But we're going to take a look at the weekly chart. And the reason I'm doing this is we're going to take a look at this actually for the last 15 years. So we get an idea of when the crude oil is going to end in regards to this sell wave. It's continuing on, it's moving on, it's beginning to get weaker and weaker as the stock market's beginning to fall. So we're basically putting a longer term point of view as to when we can take a look at going long on crude oil. But first we're going to take a look at the longer term picture. First, we're going to take a look at the continuous contracts, and this is so that we can look at price action for the last 15 years. And this is where we are. As you can tell, we're right at the lows, and so we're going to take a look at the last 15 years. Now, notice what I'm looking for. What happens when the market begins to have a long sell wave, but begins to rally above the previous 4 weeks? And that's what we're looking for. In particular case, we're looking at this early part of the 2015. We had a big decline, and we're looking for what happens when the market begins to rally of a close above the previous 4 weeks. And as you can tell, I've put in the moving average. The little red dots indicate some of our quantitative work, indicates the bearish trend. And of course, that has occurred for, you can say it's almost $60. So we've been bearish for a long time, and actually a huge gain here. This rally that you see right in here is what we're looking for. We've had a rally above the previous 4 weeks, but these little blue dots here actually indicate when it's possible that actually the bearish trend would resume, and that's exactly what happened right in here. And of course, everyone who takes our courses get to realize exactly what this means when we have these rallies of a certain size. In this particular case, it was a large correction using the weekly chart, but it was an indication that there was a potential rally because we're looking at the close above the previous 4 weeks. So let's take a look at a little bit of history here. We're going to start with 2002, and we had a big decline, and that's what we're looking for, a decline of a big nature decline bear trend. And what we're talking about is when you begin to have a rally in which you have closes above the previous 4 weeks, there is an indication and that the bearish trend may begin to end. And that's exactly what has happened in 2002. Now, doesn't mean it's going to be instantly, but it's basically give you an idea of when it can begin to start to look for a longer term trade, meaning from the bullish direction. So let's take a look at a little bit more history here. Here we return to 2007. And we began to have a decline again, but we're looking for a big decline. And when we see that, especially if it is well underneath the moving average by a certain distance in regards to average to range. Again, this is what we teach all of our students, how to analyze the decline to see when it's responsible for a possible long. And in this particular case, we're looking again, what happens when you have a close above the previous 4 weeks? It normally has at least a chance for a larger average in regards to a bounce and ability to make a quick trade. Or you can watch this for a longer term trade in regards to setting a long-term bottom. Again, these little blue dots indicate that the price is actually going to try to attempt to the bearish trend. And in particular you can see that it did that for about 5 weeks. You could actually trade this on the downside. But what we're seeing instead is that the prices begin to move higher, and of course we've had a very large term rally in 2008. But we all remember what happened in 2009. A large bearish trend. Actually, you can see once again we started to have our red dots to let us know that bearish trend is here, and it's how to trade a longer term trade. But watch what's happened. We've had a decline, And when did it finally stop? It just wasn't because it's a large distance between the moving averages. Instead, it's when? It's when we had a close above the previous 4 weeks. And that's exactly what we had in 2009. Let's continue on. Here we're looking at 2011, 2012, but that's not the kind of decline that we're talking about. Now we're taking a look at most recent, and it's 2015. Again, we have some closes, but we're talking about a close above the previous 4 weeks. So that'd be 1, 2, 3, 4 weeks. This action right in here, a close above the previous 4 weeks. And in this particular case, again, we had a rally, not very long, about 4 or 5 weeks. And we were talking about it is a potential that indeed that was it. That was the end of the bearish trend. But again, these little dots are basically indicating that it's possible that the market will try to have a resumption of the longer term bearish trend. And that's exactly what has happened. So now we're talking about the current time. We are right at the lows. And what we're trying to decide is sometime between now and the end of the year, we're looking for a long-term buy. Because we are hoping that we're going to see the end of the bearish trend, and how do we make money from this? One of the ways to wait until there is a single close above the 4 previous weeks. And you see, we just started. So we're nowhere near this particular signal, but begin to watch it over the next several weeks, over the next several months potentially. We are looking for a bottom, but we want to be a longer term trade, not a short term trade in regards to the daily price action. We're talking about looking at the weekly chart, long term. And we'll take a look at buying positions on USO, what we're looking for the crude oil in regards to USO, using that as a possible trade. But we won't look for that particular signal for some time, maybe 2, 3, 4 weeks at least, and perhaps several months. But when you begin to see a single close above the previous 4 weeks, it's time to put the trigger. Now, why do I say to wait before buying? That's because we need to look at the price action of the stock indexes, especially the spider. Take a look at what's happened. We've now moved sideways all for the year, and this could be a very long-term top here. When I say long-term, basically we're looking at what happens to prices normally do when we have a high in regards to the price action that hasn't been able to set a new high. And that's, of course, what's happened over the last, actually almost the whole year here. But for the spider, for the S&P 500, we're going to watch this price action. If this begins to decline, then yes, I do believe that crude oil is going to go lower. If crude oil is going to move lower and lower, it's primarily because of the stock market. If the stock market begins to fall and gets more and more bearish, then guess what? I think the crude oil is going to go lower. That's why we wait until we see a close above the previous week closes of the last 4 weeks. That's when you get an idea the crude oil has ended in regard to its bearish trend. But you may going to be a little more patient, because if the crude oil begins to move down, it's simply because the spider and the stock indexes may begin to fall. If that's the case, then you've got to wait before you try to buy the crude oil, including heating oil, gasoline. I don't know about natural gas. Natural gas is kind of just moving sideways on its own. But so we're just talking about the crude oil. If the stock market is beginning to fall, then guess what? The stock market is going to pull the crude oil down as even lower and lower. I don't think necessarily it's going to get much weaker than below 40. It could, but I tell you, if you see crude oil begins to get underneath 40, it's time to really take a look at for a longer term trade on the long side. So we'll end with crude oil. You're right at the lows. We have no signal whatsoever to buy a long trade, but we're going to basically watch the market for at least 4 or 5 weeks and to see whether or not this low is for a longer term bottom. This is John Shealy with Traders Country Club.